ATGG allows you to reduce your tax ability for paying house rent in case you do not get HRA. Whenever you calculate your tax, for tax calculation to avoid taxation, you have to go with few deductions. Those deductions only called as ATC to ATU. A certain disability if that person is having and you are taking care of that person means you can claim deduction. A warm welcome to one and all. This is your Adarsh sir, lecturing Vidhyaashram First Grade College, the Temple of Excellence. We are discussing the topic called Corporate Taxation, your fourth semester, Unit 4 and Session 1. In this, the topic tedious advance payment of tax and interest. As I told you in the previous session, we are going to do a very important topic for your examination, as well as it is easy to remember and easy to calculate. The agenda for today's session, there are many things to learn actually. Why? Because the same concept, ATC to ATU, while doing your assessment of individual, we use all these sections, or we call it as deductions. Without this, you cannot do any problem under income tax, because whenever you calculate your tax, for tax calculation to avoid taxation, you have to go with few deductions. Those deductions only called as ATC to ATU. We will learn individually in depth what is ATC, what is ATCCC, ATCCD, ATD, ATDD, ATDB. All these concepts we will learn in today's session. The first one, your section 80C. First one, see, it is always remember, ATC always talks about investment. ATC always talks about investment. Before I'll go to ATC or all the deductions, I'll explain you what is deduction mean. For example, you have income from salary, 5 lakh, income from house property, 5 lakh, income from business or profession, 5 lakh, capital gain 5 lakh, income from other source 5 lakh. Total you have 25 lakh of your income. You have to pay tax on what value? On 25 lakh. There is a tax slab is there. Already we have done in assessment of individual. You have to follow that. So under that, we calculate first 2,50,000 no tax, next 2,50,000 there is a 5%, 5 lakh to 10 lakh there is a 20%, about 10 lakh it is 30%. All these calculations are there. Before doing that, if you want to save tax, you have to claim deductions. What do you mean by deductions? If you made any investment outside from your income, if you have made any investment outside, like you have invested in LIC, life insurance premium, you have invested in NSC, National Savings Certificate, you have invested in post office saving bank account, you have invested in some PF, gratuity fund, or your pension fund, all these things you can claim it as deduction. Assume that you have invested in LIC 1 lakh, you made a donation to some charitable trust, some 1 lakh, and you made a Mediclaim policy for your health insurance around 25,000, and you're paying a housing loan. On that interest, you're paying some 3,75,000, and some other investment you made for 1 lakh. So all put together 3, 4, 5, 6, 7 lakh. 25 minus 7, it will be 18 lakh. You are supposed to pay tax on 18 lakh. See, your tax burden is reduced. How? By taking all the deductions. Hope you are clear. This is what we call it as deduction. Now I'll come back to the concept. The concept called ATC. ATC all talks about what? As I told you, ATC talks about investment. Under investment, provide tax deduction of up to rupees 1,50,000. Remember, you cannot make 25 lakh in LIC and claim 25 lakh as deduction. It is not possible. Why? Because maximum limit is up to 1,50,000. You can invest 25 lakh, no issue. But Out of 25 lakh, you can claim only 1,50,000. There is a maximum limit. You can claim it as deduction. Now, through tax saving investment, only individuals and HUF individual. This is also important. What is the first point? The maximum limit is 1,50,000. Who can claim this? Individual and HUF can claim this. Then can claim deduction under section 80C. Which are the deductions? What are the investment? Yes, PPF, Public Provident Fund. Next, Equity Linked Savings Scheme, National Savings Certificate, Unit Linked Investment, Senior Citizen Saving, and Life Insurance Policy, tuition fees paid for up to 2 children, and tax saving fixed deposit. All these comes under. There are many more out there, small investment. These are the major investment usually the people do actually. Clear? These are the investment. We have to claim it as 80C. Along with 80C, 80C is not the only deduction comes under investment. Along with 80C, we have 80CCC, 80CCD. This is also part of 80C only. 80C only talks about investment. 80CCC, it talks about your pension fund, your gratuity fund. All those things comes under 80CCC. 80, it is a section 80. It is a subsection of 80 actually. In this, individual taxpayer can claim deduction up to 1,50,000. The same 1,50,000, you cannot add 1.5, 1.5, 3 lakh. It is not like that. Whatever given under 80C, the 1,50,000, the same thing applicable here also. Now, claim deduction up to 1,50,000 in financial year for the premium amount they have deposited for any annuity pension. Pension under 80C, pension will not come. 80CCC, pension will come. Then, pension from the annuity plan, including interest and bonus, is taxable in the year recipient or receipt. Clear? Now, I'll come to the third one. This is also part of 80C only. 80CCD. It allows employees to claim deduction for the amount they have paid for any pension scheme under the central government. Now, so what is the deduction? 10% of their salary or 20% of gross total income. Whichever is lower, up to 1,50,000, you can claim. Hope you are clear. So, it talks about what? All your claim deduction of 10% of your salary or 20%. This is all about pension scheme. The previous one, pension. Clear? Now, these things. Now, 80CCF. 80CCF allows deduction up to rupees 20,000 for long-term infrastructure bond which are notified by the government. This is not much important. Yeah. Before I comes to 80D, remember 80C, 80CCC, 80CCD. These three, the limit is 1,50,000 applicable for individual and HUF. Remember this. So, 80C, 80CCC, 80CCD, all put together, the limit is 1,50,000 and it is applicable for individual and HUF. 80C, all types of investment. 80CCC, it is all about pension, and 80CCD, it is pension fund. Remember, hope you are clear with this concept. Yeah, limit 1,50,000. All the investment, 80C, 80CCC, 80CCD, all put together, the maximum limit is 1,50,000. You should not exceed. You can make the investment, but you can claim up to 1,50,000. Once you are done with this, we'll go with the next one, 80D. D means it is all talks about medical. So how to remember this? Very simple. D means what? Doctor, means medical purpose. If you are taking life insurance, that comes under 80C. If you take your medical insurance, it will come under your 80D. The concept is very simple. It is applicable for, you can claim maximum deduction of 25,000 on the premium paid for the family members. See, Maximum limit is how much? 25,000. For whom it is applicable? It is applicable for family members, spouse and children. In the case of insurance premium for parent, separate 25,000. 25,000 for yourself, your wife or your husband, your children, 25,000 together. And for your parents, another 25,000. Up to 50,000 you can claim it as deduction. In case your parents' age, they are senior citizens, above 60 years, instead of 25,000, that will be 50,000, double. Hope you are clear. What is the maximum limit? For yourself, your spouse, children, all put together 25,000. For your parents, 25,000. Total 50,000. In case your parents' age is above 60 years, the 25,000 will become double. It will be 50,000. Assume that your age also above 60. That also double. It is 50,000. Hope you are clear. If yours or your parents' age is above 60, the actual limit of 25 will become double. It will be 50,000, 50,000. Now, you can get an additional deduction of 25,000 if you are also a senior citizen. Hope you are clear. 50 plus 50, maximum you can claim 1 lakh. Now, in case if you go for any medical health checkup, yearly checkup, then you can claim 2,500 for yourself, 2,500 for your parents. Similarly, up to 5,000, you can claim it as additional deduction. Hope you are clear. Which are the points you are supposed to remember? Individual, your spouse, your children, it is 25,000. For all the senior citizen or your parent is another 25,000. If the age is above 60 years, the 25 will become 50,000 and 50,000. If you are going for yearly medical checkup, another 5,000 will be added together. Hope you are clear. This is what your ATD says. Now we'll come to the next one, ATDD and ATDDB. Again, D stands for what? Doctor, but dependent. Remember, dependent. Clear? Now, if you spend money to take care of disabled dependent relative, you can claim tax deduction under ATDD. For example, your uncle's son or your brother's son, your brother's daughter, your relative, first relative, or your own child is disabled, handicapped, a certain disability if that person is having, and you are taking care of that person, means you can claim deduction. What is the deduction? If the disability is up to 40%, the percentage is certified by doctors, then 75,000 is the fixed deduction. What is fixed? Even though you spend 5,000, you can claim 75. Even though you spend 1 lakh, still you have to claim only 75. That is a fixed. If the disability is above 80, then you can claim up to 1,28,000. Disability 40 to 80%, 75,000, and above 80, it is 1,25,000. Hope you are clear. Yes. Now, once you are done with this, we'll go to the next one. Section ATDD and DDB. We already learned ATDD. Now we will learn ATDDB. DDB means what? Remember, ATDD means you are taking care of somebody. ATDDB means you are taking care of yourself. Again, I'll repeat. You are taking care of yourself. You are disabled. You are handicapped. And your disability is above this much. Then your age is below 60 years. You can claim 40,000 or actual spent. It is not fixed. And if your age is more, up to 1 lakh, you can claim. Hope you are clear. So this is what your calculation. Senior citizen and super senior citizen. Super senior citizen means what? Above 80 years. Above 80 years are called as super senior citizen, and above 60 years we call it as senior citizen. Now, this is what your calculation. We learned 80C, 80CCC, 80CCD, and we learned 80D, 80DD, and 80DDB. Now, 80E, E talks about education. For example, your parents has taken loan for your education purpose, for your higher studies. Now, they have taken loan of 10 lakh rupees. This 10 lakh you cannot claim it as deduction. Every year on 10 lakh, your parents has to pay interest. This interest can be claimed as deduction. Hope you are clear. Now, if you come to this, there is no maximum limit. If your parent is paying 2 lakh as an interest, you can claim. 3 lakh, claim. 5 lakh, claim. 10 lakh, claim. Only the interest portion can be claimed. Maximum limit for claiming. There is no maximum limit. Claim if for up to 8 years. The time of loan taken from there up to 8 years, you can claim that. From the beginning of interest payment until the full repayment of interest, whichever comes first. Within 8 years, up to 8 years are time you complete your loan. Whichever is earlier, that should be considered. The education loan can be taken for self, spouse, children, or if you're someone's legal guardian. Hope you're clear. This is all about your 80E. Easy topic. Next one. Once you're done with 80E, I'll go to the next one, 80G. G stands for what? Yes, G stands for donation, giving. Giving means donation. Now, deduction under 80G is available for all the assessee. There are many slabs and certain rules are there under 80G. No need to worry much actually. You need to worry whether it comes under 50% or whether it comes for 100%. That you are supposed to remember. Now, the following donation does not qualify for the deduction. Which are those? Donation to individual, like you are donated to your friend, will not be considered. You have to donate to some charitable trust, societies, or orphanage, all are any registered societies. Now, donation in kind, giving bread, giving, for example, giving them all the stationeries, giving bags to all the children is not donation. You have to pay by cash. Now, donation paid in excess of 2,000 in cash. Now, above 2,000 you are giving donation means it should be through bank. It should not be through cash. Now, donation to institution, funds, organization not approved by Commissioner of Income Tax. See, where you are donating, that institution has to be approved by Commissioner of Income Tax. If that institution not approved means whatever you have given, that is your self-interest, we don't consider that as a donation. Then, donation to political party, it is not donation. Then, donation made for the benefit of particular community, religion, etc. also don't call it as donation. Now, which are the donation comes under 50%? See, Jawaharlal Nehru, Indira Gandhi, Rajiv Gandhi, Prime Minister. So easy to remember, all are our Prime Ministers. Nehru, Indira Gandhi, Rajiv Gandhi, and Prime Minister. All are our Prime Minister. All comes under what percentage? 50% of slab. Next, these things comes under 100%, like National Children Fund, Defense, Africa Fund, Swachh Bharat Mosh, Jilla Saksharata Samiti, Clean Ganga Fund, all comes under what? 100% deduction. Again, there are few 50% are there, like any charitable institution approved, notified temples, authority, approved education institution of national eminence, all comes under 50% slab. It is all about 80G. 80G. G for what? Giving, donation. Next, we'll come to 80GG. To claim this, you must not own a house. Now, this is all about 80GG allows you to reduce your tax ability for paying house rent in case you do not get HRA. For example, usually the HRA, house rent allowance, given by the employer owner. If you are not getting HRA from your employer, you can go for this deduction 80GG. Now, as per this, You must also live in rented accommodation. You should be in rented accommodation. Second one, you can claim the least of the following: rupees 5,000 per month, rent paid over 10% of your income, 25% of your total income. Whichever is least can be claimed as deduction under rent. Next one, once you are done with this, the next part will be section 80TTA and section 80TB. This is for HF to claim the deduction. Individual and HF, the maximum limit is 10,000. Interest earned from saving account. Like you have many bank accounts, you have a deposit. The interest up to 10,000, you can claim it as deduction under section 80TTA, under section 80TB. Opened at bank or post office. Moreover, taxpayer need to be below 60 years. Your age must be below 60. In case of senior citizen, you can claim up to 50,000 for interest income. So all these things are same. Now 80U, the last one. 80U, this subsection under section 80 of Income Tax Act allow resident taxpayer with disability to claim tax deduction. Again, we have disability, the same procedure, 75,000 and 1,25,000 depends on several disability and normal disability. That has to be approved by whom? Doctor. That certificate has to be there to claim that deduction. This is all about your deduction. As I told you, to do assessment of individual and to do the tedious calculation and advanced tax calculation, you must know the deductions. Hope you are clear with this concept. Please refer the same thing along with notes so that you will understand better. Thank you.